A promissory note is a document that details money borrowed from a lender and the repayment structure. There are two types of promissory notes, secured and unsecured. A secured note is an agreement for borrowed money with the condition that if it is not paid back to the lender, then the security, which is usually an asset or property, is turned over to the lender. Unsecured promissory note. An unsecured note does not allow the lender to secure an asset for money loaned. This means that if the payment is not made by the borrower, that the lender would have to either file in small court or other legal processes. A promissory note confers many benefits, including certainty of payment, marketability, judicial certainty. Under the Uniform Commercial Code, or the UCC, which sets out the requirements for the negotiability, the borrower's obligation to pay must be unconditional and due at definite time. Therefore, there is less likelihood as to the amounts owed under the note. Marketability. Certain transferees of negotiable notes have greater rights against the obliger under the note than the initial holder. Judicial certainty. Because promissory notes do not include many obligations other than the obligation to pay, the main issue a court needs to decide is whether the borrower is in default of the obligation to make a payment. As a result, in the event of a default, it is more likely that a lender will be granted a summary judgment. What is to be included in a promissory note? Each promissory note has its own unique set of issues and clauses, but almost every promissory note will have the following: the terms of the loan, the borrowing and repayment procedures and the calculation of interest and fees, the liabilities and obligations of the parties. It's always a good idea to run a credit report on any potential borrower, as they may have outstanding debt unbeknownst to you. Especially if the debt is IRS or child support related, it will take precedence over this promissory note. Therefore, it's imperative that a credit report is run before making any type of agreement.